Hey guys, Max here, and this is your daily market update for yesterday, Saturday, the 11th of December. Of course, markets were closed yesterday, but there were still a few things worth covering. Inflation is starting to panic a couple central banks over the world, some potential bad news regarding the Omicron variant, and some other things, so let's get right into it. So obviously, inflation data came through yesterday, and it was very bad to say the least, but the markets have deluded themselves into thinking the data is good, purely because it was roughly similar to the consensus estimates. Now, 0.8% a month inflation is not at all good. 6.8% a year inflation is also not at all good. But the markets are basically betting that the Fed isn't going to turn dovish because the inflation data isn't that big of a problem. Yeah, I know, in my mind as well, this really doesn't make much sense until you consider it in the context of the loosest monetary policy in history, ridiculous amounts of money printing and helicopter money, and Fed asset purchases that are forcing asset prices upwards. There just isn't any real alternative. Investors don't want to hold cash because inflation is so high and they lose 7% a year. They don't want to hold bonds because the real yields are like minus 6% a year. So they're jumping on any excuse to be bullish and invest their money in the markets. Crypto has been sitting steady again, not really moving in either direction. Bitcoin's sitting a little bit under $50,000, Ether's sitting just over $4,000, so no real rally based on the bad inflation data as a lot of people had predicted, but this doesn't really surprise me because again, this idea that Bitcoin and crypto as a whole is an inflation hedge might be true in the future, but it isn't really the case now. Now, the US isn't the only country that's having a problem with inflation, and the idea that Biden pushed yesterday that inflation has peaked and is going to start falling from here on out doesn't seem to be holding true either. If you remember earlier in the year, lumber prices were skyrocketing, and this was really the start of the supply side shocks that we first saw when inflation was rising. Well, it fell a few months back, but never really reached its pre-pandemic lows. And now lumber is rising again, having increased by 68% since the start of November. There have been some supply side shocks from lumber produced in Canada, some flooding in the area where 17% of all lumber in the US that's used is made. And there's a lot of demand right now because of the overstimulated economy, so prices are rising quite a lot. There's also some trouble getting the lumber transported around, just as there are problems with transporting anything around right now, and that's not helping the price crisis either. Either way, it doesn't really matter how much of this price hike you attribute to monetary policy. The price rises are here, and it's not good news for inflation in the first half of 2022. Unfortunately, it doesn't look too bright in other places either. In Europe, where restrictions are coming into play off of fears surrounding the Omicron variant, there are also calls for more government support for businesses and people when these restrictions impact our economies. Now, this obviously makes sense and is necessary to at least some extent. If a government is going to force you to stay at home, to shut down your businesses and stop people from earning money, then they need to provide some support. But let's not forget that it's this kind of support that has led us all to be in the inflation crisis we're seeing right now. So if this all comes to fruition, if these restrictions do come into play across the board, across all these different countries, especially in Europe, and if governments then turn on the money printers again, then we can expect continued higher inflation in the future. On top of that, central banks in countries outside of the US are getting a little bit worried as well, but there is a distinct split between those worried about inflation and those worried about slower economic growth. Over the course of the next week, we're going to get news regarding the decisions of a bunch of different central banks, like the Federal Reserve, the Bank of England, the Bank of Japan, and the European Central Bank. The Fed is probably going to accelerate the taper and hint at early rate rises in 2022. But if they're not going to go that far, they're definitely not going to go back and delay the taper, so they're clearly in the inflation is bad camp. Joining them in that camp is the Bank of England, and it's probably going to raise rates almost immediately, either this month or in February at the next earliest opportunity. But the European Central Bank is expected to continue with their asset purchases and economic stimulation that they've been pushing, and they've been preparing for the backlash over this over the last few weeks by coming out and saying that inflation is purely due to supply side shocks, that it has nothing to do with their irresponsibly loose monetary policy, and so ECB or European Central Bank purchases will continue. On top of that, the Bank of Japan is in a similar situation, but there's really no surprise there. They've been dovish for decades now in an attempt to actually grow their economy for once, and they've failed in this task for decades, but that doesn't mean they're going to stop now. When there's divergence like this, one side is going to get it wrong. I obviously think that staying dovish will turn out to be the wrong decision, and the UK and the Fed are finally on the right track, but there is a chance that I'm wrong as well. I just think it's time to rip the band-aid off, to suffer through a tough couple years that we deserve, and then we can get back to building a real economy that isn't based on helicopter money and 0% interest rates. It will be painful for a time, but in the long run, it will allow us to win out. The alternative is just a bigger crash in the future as the bubble and the asset prices continue to get inflated, and that wouldn't help anyone. Now, outside of inflation, there is some bad-ish news from South Africa regarding the Omicron variant, as a study into the efficacy of the Pfizer vaccine came out with pretty poor results, showing just a 23% efficacy against the variant. Again, as with all Omicron news, this is early news and it's inconsistent, and this study doesn't negate the idea that Pfizer can protect against serious illness from the variant, but maybe it's not that great at stopping milder infections. That being said, at the same time, there was a study from the UK that found that a third booster shot of Pfizer does protect against Omicron, so the data is still all over the place. We still really don't know what's going to happen with it, but thankfully the markets are closed, so they can't react with ridiculous volatility to this polarizing news. Now, over in China, we see the gambling sector getting targeted a little bit by the CCP, with Sun City Group ceasing some of their operations. The CEO of the company has been arrested, all of its VIP gambling rooms have been shut down, and staff have been told that they're not going to get paid. It's actually a pretty weird situation, to be honest. Macau, where Sun City is based, brings in millions of tourists a year, and the only reason people go there is to gamble. It's actually bigger than Las Vegas or Atlantic City in that sense, and the industry is a huge exporter for China. Now, I know that gambling isn't good for your own population, but I would have expected the CCP to keep everything open for foreigners so they can at least profit off of them a bit, at least while the Chinese economy is taking such a big hit. But the CCP's authority knows no bounds, or apparently no logic either, because this doesn't make any sense for them. It's just going to cost them money, and I really don't understand why they didn't just ban Chinese citizens from gambling, as opposed to destroying the entire industry and costing themselves billions of dollars in tax revenue. Obviously now, a lot of people have been expecting the CCP to ease off on their regulatory clampdowns, as they are impacting the Chinese economy far more than some people predicted, and it's just bad news for China all around. Lots of these same people kept buying the dip of Chinese companies every time the CCP would strike, thinking that they would finally get it right and time the bottom and the last of the CCP's attacks perfectly, but these moments just don't seem to be stopping. The CCP just keeps swinging at its big earners, and investors are getting stung time after time. Just search on YouTube for "Why I'm Buying Alibaba" and you'll see hundreds of videos of investors buying the dips for months on end, seemingly blind to the risk that the CCP really poses towards the company and themselves as investors. Funnily enough now, in China news, I also found an article detailing how Chinese citizens are moving away from Western luxury brands like Louis Vuitton and Gucci, which is something I was talking about just a few days ago. The CCP this time is at least making sense. They're attacking foreign companies and trying to promote domestic alternatives to make China richer and reduce their citizens' imports of luxury goods. This is exactly the kind of thing we should expect from China and the CCP. It's nationalistic, it's very bad for business on a worldwide scale, but it makes perfect sense for an authoritarian state to do. Either way, I thought the article is interesting, so I'll link it down below in the description for anyone who wants to read it. It will also be posted on my Patreon, so if you don't have a membership to Bloomberg and you're stuck behind a paywall, well, you can find it there instead. That is pretty much it for today. It's been a pretty slow day as far as the markets were concerned because they were closed, but thankfully, the last F1 race of the season is about to start, so there is something we can occupy ourselves with. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts to my own personal portfolio. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.